Grizzle has the pleasure of interviewing David Smith, the CFO of Agnico Eagle, one of the largest gold companies in the world. David, thank you for joining us.
It's my pleasure.
Now, there's a lot of macroeconomic uncertainty out there with central banks raising rates. Can you help us understand the risks and opportunities facing the gold market right now?
I think it's mostly opportunity, frankly. The rates are going to go up, but I think we can see already that as we see the light at the end of the tunnel for the rate cycle, I think that gold is going to do very well. And we've seen it hang in at around that $1,800 per ounce level through this rising rate environment. I think what that says is that there is underlying demand. Certainly we're seeing that from central banks right now. But additionally, as that rate cycle peaks and as the US dollar probably has peaked, I think it's going to release gold. And so I think most of the opportunity is actually on the upside from here, which will of course flow directly to the bottom lines of the gold mining companies.
And just back to central banks, can you walk us through that structural demand we're seeing from central banks for gold right now? And do you think investors are starting to shift away from holding the dollar or treasuries to gold?
Yeah, absolutely. I think that's exactly what is going on right now, is central banks are continuing to diversify their holdings. I was reading recently about a lot of the central banks are now transacting in gold effectively for things like oil. I think that's been going on for quite a while between China and Russia, and I think that's probably heightened at this point. But central banks have been diversifying for years out of that large holding in US dollars, which I think is natural and logical. You do want to diversify, but having a money that's outside of the control of any central bank is smart, not only for banks, but also for individuals.
And what do you think are the benefits of owning gold equities over a gold bar right now?
Yeah, that's very important because there's a different risk profile with the gold bar and the gold equity. And a gold bar, you can buy it and put it in your pillow and sleep on it, and it's probably uncomfortable, but it's the same size the next day as it was the night before. What a good gold equity should be able to do for you is actually grow your exposure to the metal on a per share basis. And that's what Agnico has been successful in doing for many decades. And I think one of the reasons that we're one of the premier companies in the industry is that per share focus, explaining why we're better than a gold bar.
And Agnico Eagle reported record annual production in 2022. Can you walk us through your operational performance and what your outlook is for the future?
Yeah, we did have a big year in 2022, as you say, record performance. We're also going to have record gold production in 2023, 2024, and likely 2025 as well, as the company continues to grow. Our near-term forecast is challenged a little bit on the cost front because, as we all know, the inflation is here. But it's also one of the reasons that I think gold will go higher. So I'm quite confident that net will still have a great financial result for the investors, but the industry has struggled with inflation and that impact on production, frankly, because higher operating cost has an impact on your cutoff grade and therefore your mine plans as well. So the industry struggled a little bit with the guidance for this year, but I think long term the industry is on great footing.
Well, thank you so much for your time today. That was David Smith, the CFO of Agnico Eagle.